Good morning and welcome to this month's edition of our 5 and 5 series. My name is Antonio Vaiente. I'm Head of Business Development here at AZ Sestante. I'm accompanied again with Mitch Healey, our Investment Analyst here at Sestante. Mitch, great to see you again. Can you just tell us what happened in the past month in markets, please?
Yep, another busy month for markets, AV. And look, generally speaking, equities finished in positive territory, both global and in Australian markets. Obviously still led by that sort of AI rally. About 80% of companies beat earnings expectations, finishing in positive territory. Inversely, when we look kind of at our market at home, a relatively benign backdrop again. We're starting to see inflation pick up. Sort of the big story at the moment around sort of government shutdowns, how that's going to feed through to the consumer. We're still keeping an eye on that.
Awesome. And so you talked about the AI rally and the like, and there's a lot of talk now of a so-called potential AI bubble. Do you have any comments on what potentially could happen?
It seems like every headline at the moment is kind of this AI bubble. And really for us, we're sort of cautious on the AI thematic at the moment. Again, we see opportunities in certain parts of the market, but we think by and large, the beneficiaries of AI are actually going to be the different companies that are starting to use these AI functions within their businesses.
Gotcha. And you mentioned before government shutdowns, inflation and the like. How are our portfolios positioned if inflation spikes up again?
Look, really good question. And again, the predominant risk around a government shutdown actually isn't inflation. It's probably more moderating growth and the possibility of a recession. So for our portfolios at the moment, we're positioned away from the US. We have a moderate underweight. Again, we're finding really good opportunities in places like Europe and emerging markets.
Wonderful. And if you look at the current construct of our portfolios, which managers have been winning? Which ones have probably not performed as well as we'd like?
Perfect. So really the hotspot for us at the moment is fixed income. Again, really good managers that are able to consistently beat their benchmarks. Obviously, inversely, when we look at our equity side of the portfolio, it's a pretty difficult environment for active managers to outperform. You've got really narrow leadership in the market continuing to permeate. So think, your big four banks and really that AI thematic bucket. So importantly, when markets are frothy, we're looking for managers to really manage that sort of risk overall. So, that is to say that, our Oz equities manager is a bit of a mixed basket. Paradise obviously having an excellent track record over the recent term.
Right.
Inversely, on the global equity side, we're continuing to do work, particularly around managers like GQG. Again, they've taken risk off leading into this sort of AI thesis around, is it a bubble? Are there risks permeating at the moment?
Great. So that helps with any kind of downside protection should we have a little bit of a correction.
Absolutely.
Great. As we lead into Christmas and, cost of living and all the rest of it, so we do need that crystal ball. How do you see markets performing in the next month or so?
Look, we're cautiously optimistic on markets at the moment. We're still sort of buoyed by this idea of rate cuts, feeding through to companies and margins. And really, we've got a backdrop of, relatively strong earnings growth by a lot of our portfolio companies. So, we are constructive on growth assets. Importantly, for investors, we think, staying diversified, looking beyond sort of the thematics of last year and really looking for new regions, new opportunities for investors is going to be important. So
wonderful. That's great insights. Thanks, Mitch. And thank you once again. And we look forward to seeing you next month, just prior to Christmas. We'll see you next month. Thank you.